Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, Fed Day, the 20th of March, 2024, 5:20 p.m. Central Time. I'm a bit early today, have to be, as I'm going to be out of here within 30, 40 minutes. All right. I have not seen the Fed this dovish in a very, very, very long time. They stuck with 3 rate cuts. They're looking for GDP to be this year 2.1%, strong growth still, and they're looking for it to level off there for 2025 and 26 at these levels. When you look at the inflation that they see at the end of this year 2.4% inflation, at the end of 2025 2.2 and 2% 2026, and then you can play with the core and you get to see those numbers. Here's the median interest rates that they think that they'll be at. Wow. I wasn't ready for the Fed to be this particularly dovish. The Fed made it very clear they're not worried about wage inflation at this point. They're worried just regular inflation, but they think they're still on the right path. They admitted, yeah, you had more of a bump than they expected in January. The February bump on top of very minor, so they're looking for it to crest somewhere here and start down. They gave the bulls what they wanted. They didn't pull back from this year for 3 cuts. What they did is they said in their crystal ball, well, we won't cut as much in 2025 or 2026 as we thought. Let's understand, they can't figure out what to do over the next 90 days, and you're going to try to tell me what you're doing in 2025 and 2026. It's a good exercise, and it helps traders, but nobody should pay attention to that. Pay attention to the near term. And the near term is the Fed wants to stay easy. They discussed a lot on the balance sheet runoff. They don't want to make it too restrictive. They've looked at past mistakes and they said, we don't want to make those right now. And they're not going to cut rates until they're convinced that they're staying in that trajectory to the downside, because they don't mind going to a pause. They would not want to have to go back up in the rate as some other prior Fed chairs had to do. So it was a bullish day. You're following through right now, as you can imagine. Look at gold. You know why it's up so much? The settlement time in the gold market and the silver and most metals is at 12:30 p.m. Central Time, 1:30 Eastern Time. The Fed statement comes out Eastern Time, 2 o'clock, Chicago time, Central Time, 1 o'clock. These markets were all closed before that happened. Then they see this and they zoom to the upside. The dollar fell. Most currencies took off to the upside, the exception being the yen, which is still under tremendous selling pressure as the carry trade continues. You're still looking at an energy market that I think gets support now because of the weak dollar. And we'll take a look at some of this. When you look at the weekly chart of the S&P, if you were to close right now, you're at a new all-time high close. So got power out of this whole rally. The market was looking at this, higher lows, and now you reestablished higher highs. So you've got the market fully back into its uptrend. It hasn't been able to do anything constructive and stay under the 18-day average other than in January at the beginning of the year. And then from there on, the market has just held perfect. Where did the market stop on the rally? You know where the Bollinger Band is. You're trading literally against it, so you're not running far from it. Could we see tomorrow the yin-yang impact? Well, we're up big on a Wednesday. We follow through early Thursday trade, and then we walk in the morning and the market backs off a little. Why not? Remember, the time that the Fed comes out, the Asian markets are sleeping. Europeans have gone home. If it's 2 o'clock Eastern time, I doubt many are in their office trading, right? So, and then the Asians will wake up now and they'll trade off this. At first it'll be bullish and then we'll see what they do. But the initial impact everywhere should be the Fed is staying where they're at. They're not raising rates. It sort of opens the door for some of the other central banks to look at what they're doing. You are overbought. You're against that band, still pushing on new highs. Being overbought and against the band is not a bearish item. It might be an item where the pros are taking some money off the table if they bought, but that's not bearish. When you look at the NASDAQ, you flip-flopped. With today's action, you got through the highs right here. So now you're back to higher lows, higher highs. The resistance point, as I see it, is 18,635. The support's 18,335. In the Dow Micro, you got back up to the upper Bollinger Band today. Now, you and I just spoke yesterday about this. We were talking here and I said, you're back into this higher low, higher high pattern, and over the 18-day average, as long as you don't get under this, maybe you get up and you challenge the upper Bollinger Band, and it's exactly what ended up taking place. I admit, I do not tell my clients go in to an FOMC meeting. As bullish as it is, it could have come out bearish. I'd rather come in after the fact and live to fight another day on events like that. That doesn't mean if you had existing positions on, you have to take them off. But what I tell you to put a new position on right in front of it, that's hard to do. The Russell's the weakest of the lot. It went down 2 days ago, hit the lower Bollinger Band, rallied back today, and for the Thursday trade, you could see you're up here. You're not trending at this point. And when you look at the 10-year notes, all you did is rally back to the resistance at the 18-day average. Okay? Is what the Fed did bearish or bullish for the bonds? I think traders are confused. I don't know. All right, that becomes the interesting part of it. The market's going to have to determine this because the Fed isn't raising rates. I think they made that ultra clear. Therefore, the market has to decide the market forces. Should interest rates be higher or lower? Should we be heading to 4.5, 4.6, or is the market comfortable in the 4.3 range and for the 10-year? In the dollar index, doesn't look to me now like you're going to get up to that upper Bollinger Band, but you haven't turned the corner bearish on the dollar. But this size of a drop today, 0.5 percentage point, and the news that you got out of the Fed was enough to elevate anything priced in dollars started to move. And markets against it, such as the euro, they got a big rally, but look where it went to. Remember we talked about the resistance at the Bollinger Band and support at the 200-day average, then you got under it. When you come back, that's your natural resistance point with support back at the 18-day average of closes. In the British pound, now we're waiting for the Bank of England to tell us what's about to happen. We'll hear from them, but the market widely expects that they're not going to do anything until late summer, maybe August, on their interest rate policy. Bitcoin, as I said, you got down today to the 60,000, what was it exactly? 60,955, and boy, you spun. Now, you're still in a market that hasn't turned the trend back up. You came back to fight a battle at the 18-day average. To break the downtrend, you got to get back over 69,305. I, of course, am seeing calls galore that the market's going to 115,000 this year to 150,000. When you see Brent versus WTI, as long as you stay like this, it's still Brent that is the stronger of the markets. A bit of a pullback, but the market's still looking good to me. Are we embedding? Well, you can't count tonight's numbers because you don't know where you're going to close. But yesterday, both numbers were over 80. The day before, Tuesday, they were both over 80. Not the day before. So guess what's super important? Tomorrow. You could have your third day. If so, then I'm looking for the market to maybe make a run back into the high 80s one more time. Not quite the game like that in the WTI, but I'm still liking a lot what I'm seeing in the gasoline. And this market still looks to me like it can go higher. Wouldn't surprise me during the summer to see $3. I think I've made that clear. And I'm questioning what natural gas is doing. Is it trying to bottom out, or what play is it trying to actually make? So when you put it all together, we give you things to work with. We have a trading kit. Now, let me tell you about our trading kit. Chart patterns galore, courses galore, free video courses included in some of this. There's certainly the pivot point, the Arun indicator, trading rules, chart patterns, money management's discussed, and this is print out. You print it, you put it on your desk going, oh, look there's that pattern that Ira showed us before. As I said, you get some of my free courses. My new charting course is never free, and that's coming out probably a couple of days. The cause and effect. I still look at this all the time. It tells you M1, M2, M3, where they're going. What the Chicago Mercantile puts out, and they're always putting out new courses, we give you the links right into them in this. So it couldn't be easier. Also, the charting software I use here, you can get available. There's so much we make for you. Go to iraepstein.com, free offers, or move your cursor right up here. You'll see an icon. Take it that way. If you have questions, call my staff. I'm Ira. You have a good evening.